eventually will result in an economic slowdown. So I'm afraid the bears on this one have a pretty strong argument that concerns me a lot.
In order to be ready for one of the biggest economic catastrophes in history, Bill Gates has been selling his holdings. Gates is well renowned for being a CEO, and as you already know, he excels at capital expansion. Gates made $50 billion during the past 20 years with the aid of his fund manager, Michael Larson. Gates and Larson were successful in preparing for the dot-com bubble during the 2008 collapse, in addition to making billions during the bull run. Because of this, he has routinely outperformed the S&P 500 and increased his wealth. Currently, Gates and Larson are actively preparing for what will end up being one of the worst recessions in history. It goes without saying that the economy is struggling. The US economy is dealing with historically low consumer morale, escalating inflation, the war in Russia and Ukraine, low consumer savings rates, and record-high debt levels. In 2021, the government invested trillions of dollars in the economy, but the exact opposite of that occurred in 2022. Gates is particularly concerned about the artificial trap that the Fed set for themselves, given the government's withdrawal of trillions of dollars from the economy. So basically, it's a two-edged sword that is currently striking the economy. Accelerating inflation and the enormous amount of public debt are two sides of the same coin. But now the government must decide between destroying the US dollar and risking bursting the debt bubble by crashing the economy. The Fed has chosen to pursue its second option, slowing the economy at the potential cost of an epic meltdown. Following a 0.5% gain in November, the food index increased by 0.3% in December. In December, the food at home index increased by 0.2%. 3 of the 6 main food group indexes from grocery stores have risen this month. In December, the index for fish, poultry, meats, and eggs gained 1%, while the index for eggs increased by 11.1%. While the index for non-alcoholic beverages increased by 0.1% in December, the index for other meals consumed at home increased by 0.4%. Over the previous 12 months, the energy index increased by 7.3%. Over the period, the gasoline index fell by 1.5%, while the index for fuel oil increased by 41.5%. The index for electricity by 14.3%, and the index for natural gas by 19.3% over the past 12 months. The central bank started boosting borrowing costs in March of last year when the policy rate was between 0 and 0.25%, and inflation was just beginning to surge to levels not seen in 40 years. This is well over the Fed's 2% target. Then there's the Russian invasion of Ukraine and the major upset of the global supply chain. So for many years to come, energy and food prices will continue to rise. It's challenging to imagine how this will solve itself very rapidly. Now, what does that imply for the near future in terms of the economy? The government debt levels were already extremely high, and there were already supply chain issues before the epidemic, so it adds to those issues. Therefore, it is likely to worsen the virtual economy's inflationary issues and push up interest rates, which would finally cause an economic recession. Since oil price increases are closely tied to recessions, it presents a compelling argument that gives Bill Gates' opinion more credibility. Observe how a recession usually occurs after Brent crude oil crosses the $100 per barrel mark. Since Brent crude oil is presently trading at around $120 per barrel, a recession is imminent. Because rising oil costs constitute a tax on consumers, a recession usually always occurs after the price of crude oil breaks the $100 mark. High petrol prices directly deplete the wallets of consumers. In addition to giving the consumer less money to spend, this significantly negatively impacts consumer sentiment. Consumer sentiment is currently at its lowest point since the 2008 recession, with debt levels regularly peaking and bottoming out. Due to the cyclical nature of the economy, Gates and Larson are aware that 2021 was marked by a great deal of speculative activity. But there will be a significant economic downturn. Gates and Larson have been putting several hedging plans into place in case the US stock market crashes, and shorting stocks is one of these tactics. Short positions are not required to be declared to the public, unlike long ones. We don't know what equities Gates is actually shorting until the SEC's latest plan, which is intended to remedy this, is approved. Having said that, Elon himself stated that Gates has a short position against Tesla shares. Gates advertises himself as a big proponent of green technology, but Musk feels that this is in conflict with his Tesla short position. Musk wrote on Twitter, "I guess I have some trust issues with him too," because Gates still has a multi-billion-dollar short position against Tesla, while claiming to help with global warming. Gates' Tesla short bet has already cost him over $1 billion, but it is obvious that he has not yet closed out the position. Elon revealed that it was originally $500 million, but Tesla's value increased significantly after that, increasing the closing price to $1.5 to $2 billion. Leaked messages revealed that Gates' short stake in Tesla prevented them from meeting, which would have allowed them to discuss philanthropy. To be clear, Gates texted 7:20 on Wednesday. "Great," Elon chimed in as a response. Then Gates informed Elon that he had just landed. Elon stated, "Cool. Do you still oppose Tesla with a $500 million short position?" Gates responded, "I have a short position, I acknowledge. I apologize for not closing it out. I want to talk about philanthropic options. It is necessary to verify the veracity of these leaky messages, and the assertion that Bill Gates holding a short position in Tesla is not at all top secret. Economic activity cannot be simply increased to pre-pandemic levels by printing money. The pandemic's economic effects are still being felt today. The fear of this sickness has completely altered people's behavior in terms of their desire to travel, attend activities, or simply visit a restaurant. Therefore, unless we can assure people that we are closely monitoring this situation and that coming to your job, a car factory, or a construction site is safe enough for us to feel certain you can do those things. Nobody should believe that the government can wave a magic wand and suddenly the economy is anything like it was before this happened until we get there, which we are definitely not at the moment. That's unrealistic because we do not live in La La Land. And so, as you may be aware, there has been both a demand-side shock and a supply-side shock. The demand-side shock is mediated by both the fear of infection as well as the overall wealth effects of many people losing their jobs and entire industry operating at a much lower level than in a normal economy. Gates said that his area of expertise in investing is in producing assets, but in reality, he has been selling these assets. He sold millions of shares in numerous companies, according to his most recent quarterly statement for the first quarter of 2022. This comprised shares of Berkshire Hathaway, worth over $1.3 billion, Caterpillar, worth over $500 million, and a wide range of other stocks. We must examine Michael Larson's approach to comprehend why Gates is selling his investments. Larson is the mastermind of the enterprise. He is an expert at maximizing alpha, the risk-adjusted return in the investment world. Despite the market's severe collapse during the 2008 crisis, Gates' net worth only slightly decreased, according to those close to him. Despite the fact that Larson has kept his technique a secret, we know from public documents that he mimics Buffett's investment approach. Looking at the investments in Gates' portfolio, it is clear that the majority of the businesses would not be affected by changes in the economy. One example of this is Gates' $3 billion investment in waste management stock. Because the stock market is down by 50%, nobody is going to quit dumping their trash. Diversifying into several asset classes is another aspect of Larson's method. Due to his high alpha and diversity, Gates is the biggest U.S. private owner of farmland. From 1991 to 2018, the average return on farmland was over 11%, with no years experiencing a loss. This is so because people won't stop eating during a recession. Because farmland offers substantial rewards with little to no risk, it might have a high alpha. Know that Larson is renowned for investing in non-traditional assets like private equity, which entails acquiring privately held businesses. Private equity is a market that is closed to individual investors like you and me, much like farmland. Private equity, on the other hand, is, for Gates, a great opportunity to diversify and further hedging his portfolio. What stocks are you looking to short in the coming days or weeks? Let us know in the comments section below. If you enjoyed this video, please hit the like button and subscribe. I'll see you in the next one.